Good morning, everyone, and welcome to the morning pre-market homework session for Friday, May the 30th, 2014. It is the last day of the month of trading. It's the last day of the week of trading. It's been a very interesting environment this week with extremely low volume on a push, which I consider to be a beginning of this blow-off top. My name's Doug McKay, and I am the founder and head moderator for Quantum Leap. Quantum Leap is not a commercial venture, it is a private venture. We are a group of retail traders operating within a self-organized learning environment. We come together in a Skype chat room each day to talk about trades, talk about the market, talk about our observations. If you're interested in checking out, you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, everything that we do in Quantum Leap is shortly being ported over to our new website that is in development right now with a very interesting and very cool new software called Stealth Analytics. And if you want to find out more information about that or get involved with Stealth Analytics or take a 30-day free trial, give me an email address to d.mckay@stealthtrader.com or go to stealthtrader.com and download the free trial. It is in the link. Anyway, each morning we come together to talk about the market. I do my market observation, the structure. I start with the key numbers and the macro to the micro. We go through a normal routine each day to prepare for our trading. If you're watching this on YouTube after the fact, you might want to skip ahead and get to more of the in-depth chart analysis and where we start setting up our trade levels and our targets and our hypotheses for the day. But as traders, we don't take shortcuts. We do the same routine every day, every morning, so that we're prepared and ready for this wonderful market of ours. Before I do anything, I've got to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or instruments that involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence, and yada, yada, yada. Okay, let's get to it. So let's take a look at the numbers. Of course, we are way above our year open at 1837.75. We have a new all-time high at 1918. We have a year low way, way, way below us. And then our month open this month is 1879.50. Now, I want to talk about this for a minute because we hit critical mass at a point yesterday. And what critical mass is, and just to run it through real quick so you understand what I'm talking about. If you look at the 20-day full session ATR, yesterday it was running right around 1530. Now, critical mass is a theory that if we get to a point that we can't get to the month open, either above it or below it, there is a point where there's just not enough ATR room. So yesterday we had 2 days left of trading at a average daily range, 20-day, at 1530. Well, 1530 and 1530 is basically 31.5 points. And our month open is 1879.50. So our critical mass number was 1911. And if you look that once we got back above that 1911, they battled there for most of the midday. And the theory behind critical mass is once we get to critical mass and that holds, or holds us above or below, it doesn't matter, you'll get some capitulation from the bears or the bulls. In this circumstance, it's the bears. And there's no way we're going to get back to the month open, so a lot of times they'll just give up or capitulate, and the buyers will take control on very low volume and drift us up away. That's critical mass. So I talked about this in the room yesterday and it's something that you want to think about. It's more psychological than mathematical, but if you think about it, just very simply, well, the Bears want to get us below and have a bearish month. We have a bullish year and a bullish month right now, but they're always looking to push it lower. And once it gets to a point where they realize that it's going to be a bullish month, they'll step to the sidelines a lot of times, and the buyers will take control. That's the theory. I didn't write it. I'm just telling you about it, informing you. Excuse me. Anyway, sorry about that. Anyway, that's one of the things that I was observing. And of course, once we held that 1911, we drifted up and we went and tested that 1918, or put the 1918 new all-time high and new year high up at that level. In terms of the intraday numbers, Globex opened yesterday at 1909.75. We had a high of 13 and a low of 08, and we opened in range at 1912.25. We had an open auction in range. Now, we had a neutral day yesterday, so we were looking for the probability of a rotational day. And my main hypothesis was that we were going to have a let me just take a drink of water here. My main hypothesis was we were going to have a rotational day. Now, I was actually looking for a rotational day down to test the 1904, 50, 1903 level. But once we hit critical mass and they held, then my bias shifted to my second hypothesis, which was a rotational day, and go and break the high at 14 and make a new high. I didn't think we were going to get any type of extension, and we really didn't get much of an extension. So we only had a normal variation day. We did have a 2 3/4 point opening swing with the high 13.75 and the low 11. And there's that 1911 number again. And our initial balance, 13.75 high, 07.25 low for 6.5 point. You can see that we've been trending up for the last 8 days on all our values intraday. You had a 1230 number, 1912, RTH high, all-time high, 1918, RTH low, 07.25. And this was interesting too, because this went down and we completed the 80% rule when we broke back inside of value, which is one of our levels that we're watching. We're looking for the rotation down to take out the naked VPOC and then complete the 80% rule, and which they did, but the buyer stepped right in at that value area, low, and or sorry, it was the value area high, and just ripped it up to the upside. Our RTH closed 1917.50, and our VPOC raised again at 1912. So value continues to increase up here. 20-day ATRs are running RTH just under 13, just over 15.25 for the full session, and just under 7.75 for the Globex. And you can see that these RTH and full session ATR targets, even though we're broken out of balance, they continue to get compressed. And when you get compression within the within the 20-day ranges, usually you get a big move off of it. I'm thinking that they're going to drift today on very low volume. I'm not expecting a big move. I think they'll try to test this week high at 1918, but I think next week's going to be the explosive week. And I don't know if it's to the upside or to the downside, but if I was a bet man, I think that we'll get a fairly significant rotation down next week to test some levels below that we'll talk about. Our value area high was 16. Our value area low was 750. You can see that the value area as well is continuing to increase. And we broke the IB to the high side at 13.24. Now, I did the IB. We've been doing an IB break study for quite some time, and this is a time study of when the most probable time for the initial balance to be broken. And usually that has been in around the first, what we call the first pocket between 9:30 Central and 9:45 Central. Lately, and this month, it's been breaking much later. It's actually been breaking, the average breakout time on the IB is actually 10:24 Central. So we have been breaking late as they've been battling this zone. Volume yesterday, again, extremely light volume, only 834,000 in the RTH and only 977 in the full session. And again, this whole week has been on relatively low volume because people are just sitting on the sidelines because they just don't know what to do. Currently, our full session high in the Globex is 1918. Our full session low in the Globex is 1914.25. So we have ATR targets at 1929.50 to the upside and 1902.75 to the low side. Now, we're up in an area that we just don't, above us, we don't have much to go on. So I'm not going to get into details on how I got these measured moves, but I have measured moves. Well, I'll get into a little bit of detail. Basically, I follow a rotational chart here based on ATRs, and the average extension that we're seeing, there's two of them. There's 64 points and 73 points. So if I go down to the last swing low on the OTF participation, that's in the 1859. So I've got two measured move targets at 1922 and 1931. So you want to mark those down as possible targets. And if they coincide with some other methodology, that's even better. But I'm not going to get into the details to that because we've got to get through what we're doing here. So let's go over and take a look at the macro to the micro. In the trends, I like to start with the monthly and work my way down just so that I know what we are in terms of the trend in context of the different time frames. Monthly, two moving averages that you'll see on my chart are 9 EMA, 20 SMA. Those are the ones that I use. And we've got good slope, good separation, prices paralleling the 9 very nicely, and we're trading above the last 2 months and near the all-time high at 1918, currently trading 1916.25. The trend is very much intact on the monthly. On the weekly, the same thing. We've kind of gone a little bit parabolic in the last couple days here on the last couple of weeks, I should say, on the weekly, and we're creating a technical gap here. And again, technical gaps is something that I look at. Once you move away from the 9 EMA too far, too quickly, within whatever time frame of the chart, you'll have a tendency to get consolidation and horizontal movement as the 9 EMA comes up to catch up, or a price movement down to meet the 9 EMA and close the gap. Usually it's a combination of both. But I always watch to see, and you can see every time that price got away and created these technical gaps that came back down to test them. You can see them every time. So it's something that I watch. On the daily, same thing. We've gone very parabolic in the last week, and we've just got huge slope and separation, but we've got this technical gap that we're creating, and this gap has got to get filled at some point in time. We can't go up forever. I mean, you've had just this tremendous move upwards for the last 8 days. A test of the 9 EMA will take us down in around, it says 1903, and I think it's going to be, by the time we get there, close in around that 1907 area. But it could just go sideways and close somewhere in around that 1909.50 is the next area that I'm looking for the possibility of close. Going to the geometric chart, this is a little bit busy chart, so bear with me. There is, let me just get rid of the open interest here. Yes, I want, there we go. So there's a long-term upward sloping fork center line. There is the intermediate upward sloping fork center line. Then there's this new upward sloping short time frame center line, and then I've got the opposing fork that we broke out of when we broke above this energy point right here. So currently we are riding the center line of this intermediate upward sloping fork. We do have an energy point down below us, and it is due to hit basically next week, and that's all the way down to at 1893, 1894 level. So I'm keeping an eye on this center line. If we break below the center line at basically 1250 thereabouts, then I'm looking for a move down to test this energy point. This is still within range here, and it'll also be the retest of the center line of the intermediate upward sloping fork from above. So that's the point that I'm looking at. If we get a big move up today, a test of the upper line of the short-term upward sloping fork will take us up to around the 1933, and it's not 1933 I'm looking at, it's that measured move at 1931. There is another energy point that comes into play possibly next week, June the 10th there around, and that's all the way up at 1954. And I have another long-term measured move at 1955.35, which is a fib extension. And there's one at 1955.25 and one at 1966.50. And again, I don't know what's going to happen. All I'm doing is paying attention to the levels, and then I'll trade what I see and what the market gives us. Going down to the intraday, seeing what the trend is coming into the day. This is a good example of a technical gap being closed by a combination of price and time. We went sideways, but we moved down to close out the gap down at 1913.75. We held, and the trend is continuing. We do have slope and separation on the 4 hour, so we do have a trend coming into the RTH session on the 4 hour. On the 30-minute, a little bit of a different story. Another beautiful example of a tech gap right here, and then they move down to close that tech gap. But we've been consolidating sideways on this particular chart, so there is no trend on the 30-minute. Going down to the 5-minute, you've got the same thing. We've got consolidation and above and below the 9 and the 20, so there's no discernible trend coming into the marketplace, the RTH session on the 5-minute. Let's go to the big picture and start looking at our composite. You can see that we broke out of this long-term volume, this long-term balance area, going all the way back to February 21st, and we finally broke out of it. The microcomposite VPOC is 65.25. So is the composite VPOC. My VPOC composite date is October the 9th, 2013. But we broke out of that balance, went up, accepted the 1890, where they tried to hold it after making that all-time high at 1898.50. Then we broke out of there, continued up, and then we've been consolidating and holding value at in around this 1907, 1908 area, microcomposite VPOC. Then we broke out of value and broke out of that range and went up, and we're starting to try to hold value up in this 1917, 1918 CHVN here. The key line in the sand, and there's multiple reasons why that I'll get into, is this 1914.50 area. So that is going to be my key line in the sand. Below that, I'm looking for a rotation back into this distribution zone and back down towards this 1908 microcomposite VPOC. So let's take a look at what has happened overnight and start moving our chart levels over. So overnight, we have an overnight high at 1918, and this is one of the reasons you can see we've tested this 1918 multiple times. and I think that this is a weak high. So if we hold that, oh, and let me just get the lows in first. Our overnight low is down at 14.25, and our current microcomposite VPOC is down at 1950.50. All right, so let's get rid of this and expand this out a bit. And let's talk about the levels for the day. So you can see that this 1450 is a key area, CLVN, and it is also a key LVN from yesterday, and it's also our overnight low. So to me, this defines whether or not we go higher or lower, and that is going to be my main line in the sand today at 1914.25. I'm going to use the quarter because it's the low, and if we break below that, then we're likely to rotate down towards this 1912 naked VPOC from yesterday. If we hold the 14.25 on the open, I would be looking for them to come up and test the value area high from yesterday at 1916. Okay, that would be the other area that I'd be looking to do business. If we get above the 1916, then I'm looking for a rotation to take out the naked close from yesterday at 1750. That will be my first target above. But then I've got the 1918 just above it, which is the overnight high and the all-time high, and that's going to be a main target above, but it's also going to be a trade area for me, because above 1875, my first target is going to be 1922. That's the measured move from the rotation chart. Come on, draw for me. Finicky charts. And then above that, we've got the 1931. And move this one down to 31. And again, there is not much to go on up here. So if we break out a 1918, don't try to fade the move. Not on the last day of the month. Not in this context. Okay, if you're not long with the break of 1918, go home, call it a day, call it a month, call it a week, forget about it. I think that you just try to fade. You're just fading on air. There's no edge whatsoever up there. So just keep that in mind. If we break below 1914.25, look for a rotation down to test the 1912. You want to make sure that you get funded, okay, or scaled before you get to this 1913.50 area. But I think that it's not gonna hold. It's really between 1912 and 1913.50. Because it's an area where you might find some responsive buyers coming in, but I don't think it's going to hold. I think they'll go and they'll try to pick up buyers down here at 1912. Then below that, we're back to that 1910.50 area, 1910.75. We've got an LVN there, okay? You've got a CLVN there, and you've got the value area high from Wednesday there, so that would be the next area that I'd be looking for some support and some responsive. And I'm going to use the 1910.75 because I really think that's was a number that you can play off. You can see that once they got back up above that 1911 critical mass number, they fought that area aggressively, and then basically the sellers capitulated, and we had a nice beautiful move up to make a new all-time high as they capitulated to the sell side. Below 1910, we've got the 19 0950, which is the value area high from the 2 days of balance that they accepted value around this 1908. So 190950 would be the first target below. And then the second target is going to be 1908, the microcomposite VPOC. And you've got this 08 and 0750. And you can see, we've got the 0750 value area low from yesterday. We've got the 07.25 value area low from the prior day, and you've got the VPOC at 0775. So this whole area right here really becomes one great big huge target. You know what I'm going to do? I'm going to change this, and I'm going to just use the trade area, because trade areas are targets as well, but it's also areas that will do business. But this will cover this whole area here, because we'll probably get some push through down as low as the 1907 area. Below 07, you do have a value area low at 06 and 0650, but the big number I'm watching below is down here at between 03.25 and 0450. But I'm going to use 0450 because I think if they break below the range from Wednesday, that then we go down and we'll hit and target this 03.25, 0350 area, because then we're likely going to get into that zip line area and not much holding us up all the way down to 1899.75. This is unoptioned territory down here. Now, the one thing you've got to worry about is if we do get below this 1914 and we get below the 1912, we've got unoptioned territory. This is a phenomenon that I like to call getting stuck in the wicks. This is unauctioned territory. You can see how the profile itself is very blunt. We have undetermined fair value between 0650, 0775, 0950, and 12, and even one at 11. So this area, if we break below 1914.50, my main secondary hypothesis, that's actually an oxymoron, my main secondary hypothesis. My main hypothesis below 1914.50 is that we get stuck in the wicks down here, and we chop around and we get a rotational day with a push down towards test the value low down here, and the CLVN at the 0304 level. But if we hold 1914.50 and we can't break above it or break below it, then look for them to chop it up on a slow grind up, to test that weak high and put in a new weak high. So that's what I'm looking at in the ES. Let's just quickly take a look at the Renko chart to see how it looks like on the Renko. Not the TF Renko. How about the ES Renko? So currently right now we are, just below the center line of the Keltner channel at 1915.25. If we hold below it, test of the lower Keltner is going to take us down to that 0950 area, and right where we, where we've got that target below, so you can see how that corresponds. If we get back above the Keltner center line, move to take out or test the upper Keltner line, will take us all the way up into that 1920.75. So that's well within our range. And remember, we've got that target at 1922, which is a measured move. All right, quickly going over the Russell. I've got the Russell already done. So the Russell, in the big picture, come on, come down to me. All right. Our current balance on the 3-day microcomposite VPOC is 1138.10. We're trading just below that. Yesterday's balance area was 1938, and we've got the value area high from Wednesday there at 38 as well. The key number that I'm looking at right now, because I think we're going to get a lot of chop in this area between this 34 and this 40, is the value area high and the range high from Friday or from Wednesday, and that naked VPOC that was closed out yesterday at 1940. If we get outside of value, then I'd be looking for a push up to test the range high, but the real target I'm looking at is this 1142.30 above us, and this should be 30. I got to change this chart into tenths instead of quarters. Anyway, it's the number is 1142.30. I'll adjust that on the chart, and then that puts us outside of range and outside of value, and we're likely to go up and test 43.60, which is the range high from the microcomposite. But the big target above is this naked microcomposite VPOC at 1146. And then above that, we get into this triple distribution area and undetermined value up here between 48, 49, and 51. So that's what I'm looking at to the upside. I think if we get up to this area, we're just going to chop around in there. But if we hold below the 1140 area, then I think we see a lot of chop. The first support that you're looking at is the 1136.40. And below that, you've got 35.25 as a target, which is it's actually 35.40. Sorry, and that's the VPOC from the prior day, and right in that area, and the CHVN. And then below that, support is going to be at the value area low here, and the this LVN. This is kind of a P-shaped profile, and we're likely to come down and test this area down here, is down here at 34.50. And then below 34.50, the range low is 32.10, but I'm watching this 31.40 area. I think it's more key. If we come down and get below this 34, we're going to test 32, but I think we're going to push through and actually come down and test this 31 with the 30.20 range from Wednesday just below it, and the main target below at 1129.50, which is this former microcomposite VPOC where they accepted value and then ripped it to get above and get into this upper distribution zone. Below that, you've got 26, which is the value area high of the balance zone that we broke out of with this gap up. And then you got naked VPOC at 24.80 and naked close at 24. But the big number below us is the microcomposite, the composite VPOC down here at 1121.10. And I think if we get below this 31, this would be a really nice shorting opportunity with a continuation move down to this 21. So that's a nice, fairly decent looking move. Going over to the, let's just take a quick look at the Renko for this. So currently we are in the lower distribution of the Keltner channel, and the center line is a test of that 1138.80, or right there at that overnight VPOC at 1139, and the naked VPOC at 38. A test of the lower Keltner, test that 36 area, value area low, and then a test if we break above the upper Keltner, a test to the upper line will take us up into that 41 area and our trade area up there at 41.20. And you can see how these Keltner channels with the Renkos correspond with the values of the profile itself. Going over to gold, well, gold's found some weakness with this move, and we're just we're just drifting down after breaking out, and we weren't able to hold that 65 level. So I mean, the main target down here below is this 1241. Let's just draw a profile and see what we've got for the last 2 days where they're trying to hold value. So they're trying to hold value in around the CHVN. You can see that this is a former microcomposite area for multiple times that we came into this zone. So, you know, if we can hold above the 49.80 level, then I'd be looking for a drift back up towards this 58 and possibly even continuation up to 65 to test the 65 level yet again. But if we can't hold, if we can't get above this 55.40, then I'd be looking for continuation and a drift down towards this low at 49.70 with targets below at 46.75 and 41. And then a real key number for me on gold now is going to be this 37.70. I'm flat gold. I'm not touching this in this area. I won't touch this thing again until we get back above 65. And then again, I'm still looking for a longer-term move back up in gold, but they've, you know, they found some weakness with the market indices, you know, ripping to new highs. You know, you had to expect that gold was going to struggle to hold. So that's going to complete the morning homework session for the Friday, May 30th, 2014. As always, trade well, trade safe, and we will catch you on the flip side.